Okay, let's jump right into this explainer. We're following a guy named Kevin on a journey that is hilarious and honestly painfully relatable. We get to watch him evolve from a state of total blissful financial ignorance into, well, slightly less financial ignorance. It is this brilliant, sarcastic look at modern American money culture. We're going to break down the exact financial traps he trips over one by one because, let's be real, most of us have fallen into these exact same holes. So picture this terrifying cold open. Kevin checks his banking app and realizes his account earned exactly 37 cents in interest this entire month. As he tragically points out, 37 cents is only enough money to buy exactly half a grape. It's funny, sure, but it's also that exact brutal wake-up call that kicks off his whole financial awakening.
Section 1. The Giant Bank Betrayal. Banks are not furniture vaults.
See, growing up, Kevin genuinely believed banks were just these safe, responsible, super boring money lockers. Kind of like giant vaults for furniture, where your cash just sits there collecting dust and staying perfectly safe. But his friend Marcus hits him with the brutal reality. With traditional savings rates sitting at basically zero, your money is just sitting there aging in a rocking chair. Meanwhile, inflation means the cost of your groceries is literally sprinting away from you every single year. So technically, your money is actually losing value just by sitting still. To fix this disaster, Marcus introduces Kevin to the concept of high-yield savings accounts, or HYSAs, and he does it with what might be the weirdest, yet most brilliantly accurate financial definition ever. Quote, interest is basically your money making tiny baby money. It sounds totally absurd, I know, but it instantly demystifies the whole thing. Instead of letting your money just get old and useless, you put it somewhere where it actually goes to work for you.
Now, if regular interest is your money-making baby money, compound interest is those babies growing up and having their own babies. It's money reproducing aggressively over time. For Kevin, this is a mind-blowing revelation. He realizes compound interest is basically an adulthood cheat code. It's this passive income side quest that rich people figured out to multiply their wealth while they're literally just sleeping.
Which brings us to Section 2, what banks actually do, the financially sophisticated casino.
So Kevin suddenly realizes he wasn't even invited to his own money's job. He always pictured banks as these giant Scrooge McDuck vaults, right? But the reality is way more intense. Step 1, they take your deposit. Step 2 and 3, they don't just hold on to it. They turn right around and hand it to what Kevin views as a terrifying credit card villain. They take your cash, loan it out for someone else's mortgage or credit card, and charge them a massive 24% APR. They advertise friendship and hand out free lollipops, but under the hood, they operate like a financially sophisticated casino, and they're using your chips to play.
All right, Section 3, the overdraft incident. Punched, then charged for the punch.
Things get pretty dark at a local burrito shop. Kevin confidently swipes his card, only to have it aggressively declined. He literally cannot compute how this is possible, because, in his words, he had money yesterday. Well, Marcus is more than happy to read out Kevin's receipt of guilt: concert tickets, sneakers, an espresso machine, and the absolute kicker, a Himalayan salt lamp. Kevin desperately tries to argue that the lamp was spiritually healing, but Marcus shuts that down fast. Buying a spiritual rock is exactly why he currently has $0. It is a flawless snapshot of how modern lifestyle inflation totally drains our accounts. And then the greatest plot twist in modern banking happens. Kevin's phone buzzes. He just got slapped with a $35 overdraft fee purely because he had no money. It captures the absolute maddening absurdity of the system so perfectly. Kevin sums it up best. It's literally like getting punched in the face and then receiving a bill in the mail for the punch. Moving to Section 4, debit versus credit, the shrinking wallet versus the villain.
Desperate to bounce back from the whole burrito humiliation, Kevin proudly announces to Marcus that from now on, it is debit cards only. He thinks he's hacked the matrix. But Marcus bursts his bubble, pointing out that debit isn't some magic shield. Debit uses your own actively shrinking funds. You swipe it, that money is permanently gone. Credit, on the other hand, is borrowed money. If you're smart with it, credit builds your history and gets you rewards. But if you let that credit card villain take the wheel, that borrowed money will emotionally and financially destroy you.
This whole debate leads Kevin straight into the terrifying reality of credit scores. Up until this point, he honestly thought a credit score was just like an emotional vibe. But no, it's literally hidden video game stats for adulthood. Every single financial move is tracked, and bad decisions actively lower your ranking in the game of life. And the crazy part is, these invisible stats have massive real-world consequences. Whether you can rent an apartment, get a loan, afford your car payments, or even get a decent mortgage rate,
It all hinges on this one completely made-up number. Kevin's reaction to learning this? He just sighs heavily and declares that modern America is utterly exhausting. And honestly, who among us hasn't felt that exact same way?
Section 5. Ignoring free retirement money. The Star Wars robot confusion. So Marcus, being the good friend he is, tries to save Kevin's future by bringing up retirement accounts. He tells him he needs a Roth IRA. Kevin is deeply, profoundly confused because he genuinely believes Roth IRA sounds like a new Star Wars robot. And, okay, fair point, it totally does sound like a droid. R2-D2, C3PO, Roth IRA. But as Marcus patiently clarifies, no, it's a tax-advantaged retirement account. But things somehow get even worse for Kevin when they start talking about a 401k company match.
Kevin casually drops the bomb that he has been aggressively ignoring his company's 401k emails for 3 straight years. Marcus just stares at him in disbelief and drops this brutal quote. Kevin, that's literally free money. By ignoring the match, Kevin proves he is somehow financially allergic to good decisions. He literally left thousands of dollars on the table just because HR emails looked kind of boring.
Section 6. The Emergency Fund Era. Evolving like a Pokemon.
The real climax of our story hits when Kevin gets slapped with a sudden $1,200 car repair. Now, his very first instinct is to try and, quote, rebuke it financially, as if he can just cast a wizard spell and make the mechanic's bill vanish into thin air. But Marcus steps in, explaining that this exact heart-stopping scenario is exactly why emergency funds exist. Financial peace isn't about flexing on the internet. It's about being able to survive a massive $1,200 hit without spiraling into a total existential panic.
So we finally get to watch Kevin's step-by-step evolution into a somewhat responsible adult. Step 1, he opens that high-yield savings account. Step 2, he actually starts an emergency fund. Step 3, he downloads a budgeting app. And step 4, in a massive victory for his personal growth, he deposits $100. Marcus proudly notes that Kevin is basically evolving like a Pokemon right before his eyes. He is finally taking control of the chaos.
But of course, Section 7, Cliffhanger. The grocery crisis, why everything keeps getting more expensive.
Because financial peace never lasts long, right? Just as Kevin is attempting to practice his new financial zen, he hits a massive wall right in the middle of the grocery store aisles. He's looking at the shelves and realizes that basic, everyday staples have absolutely skyrocketed. We're talking $8 for milk, $12 for eggs. He's staring at normal breakfast foods that are currently priced like they should be locked behind glass with the luxury jewelry.
And Kevin just perfectly captures the absolute madness of modern consumer behavior and this runaway inflation with one incredibly accurate question. Why are groceries moving like crypto? It's hilarious, but it hits so incredibly hard because, let's be real, we have all felt that exact same shock at the checkout line recently.
So, to wrap up this explainer, we really have to look at ourselves. We all sit here and laugh at Kevin. But how many of us still have our cash sitting in a traditional account, just aging like old furniture? Are you actively making baby money, or are you secretly letting a spiritual salt lamp drain your wealth? Seriously, don't be a Kevin. Master the chaos of modern money culture. Level up those hidden adulthood stats. And for the love of everything, go get your free money.